Hello and welcome back to the Satoshi Society YouTube channel. My name is AJ, one of the co-hosts here, and today we are going to take a look at the technicals on Bitcoin. And I am going to keep it quick and keep this video short because there hasn't been much movement within the price of Bitcoin. Bitcoin is just trying to sort of decide which direction it wants to, it wants to continue in, whether that's going to be towards the downside or whether that's going to be towards the upside. But I'm going to help give you an understanding of that within today's video. It's just sort of something that I wanted to add on to what I was talking about in yesterday's video. So as I said, I'm going to keep it quick, but I'm going to, go straight to the point. And please make sure you smash a like on this video if you want me to continue bringing this content and you want me to continue bringing trades, and I would really appreciate it as well. So please just smash that like button. It is free and it really helps me and the channel out. So jumping straight on into the Bitcoin charts, then what we can see is Bitcoin on the 4-hour chart, and as I said in yesterday's video, we did break towards the downside right here of this ascending parallel channel. Okay, that is bearish. Okay, it does give us a bearish target of around $21,700 approximately, but then we do have a major level at $21,468. So that's where I would be looking for the price to come to if we do stay below this resistance level here. Okay, this previous support, if we stay below this previous support using it as resistance, we are most likely going to come down and test this $21,468. Why do I think that? Well, coming over to the DXY, we can see that the DXY is continuing to push towards the upside after bouncing off of this major support level. Okay, right now we are coming into sort of a shorter term resistance. We've got a major resistance right above us, but we're coming into a horizontal level right now. You can see we've used this as support twice here, coming all the way back here after the break towards the upside. We've used it as support here, slight resistance here as well, a bit of a deviation right there. But initially, this is a very, very important level right now. If we can break above this on the DXY, then the DXY is most likely going to move higher, meaning that Bitcoin is most likely going to move lower and have a bigger correction. However, if the price of the DXY can get a rejection from here, then could be likely that Bitcoin could finally break back above this this resistance level here, previous support, now resistance level. And if we can do that, that is great, okay, because that will invalidate that target of 21,468. But whilst we are below this level, it does mean that we do have a target of around $21,468. That's where I would expect the price to come to, okay? Now, if this DXY is going to continue to increase, as I said, we're most likely going to see we're most likely going to see Bitcoin pull back, okay? But initially, first of all, what we could see is potentially a retest of the resistance, previous support as resistance, then a rejection, and then the price starts to move. But what I am looking at right now is that the DXY looks as though today it wants to continue pushing towards the upside. And if that is the case, then Bitcoin is going to continue to move towards the downside. However, if the DXY turns around today and starts moving towards the downside, then Bitcoin can start having a push towards the upside, okay? Another thing that we want to keep a close eye on is the ES, okay, which is the S&P 500 E-mini futures. What we're seeing here is that is getting a rejection from the major resistance level right here. If that is the case, then we're most likely going to see a pullback within the ES, which is going to feed into the crypto market as well. So we've got to be very aware of that. Even if we're not trading, the traditional markets, it's always good to look at the traditional markets. Even though we're focusing on crypto, because it gives us a good understanding of where the market is going to go. So looking at Bitcoin, for me, to be honest with you, with this DXY continuing to push towards the upside, as you can see right here, if we are continuing to see this DXY push towards the upside, then we are most likely going to see Bitcoin pull back and come down to, these intended targets. Now, the first intended target I have is sort of around $21,700 because of the price target for the break towards the downside here. However, the main target that I'm looking at is $21,468 because we have major resistance here, okay, and then coming all the way back here, it has been resistance back here as well. So this is a very well respected level, and I would expect the price to pull back to this level. If it does come and hit that target of $21,700. So that is what I'm looking at. I've just seen a comment from Chuck the Man. You charted that wrong, mate. It should be an ascending broadening wedge. Ascending broadening wedge. Maybe you could chart it that way as well. Let's have a look. Let's have a little look here. Maybe you could chart it like this as well. For me personally, you could chart it like that as well. Okay, potentially you could chart it like that as well. Personally, for me, I'm looking at it as an ascending parallel channel. It's respected that ascending parallel channel quite well. Resistance, 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 resistance. 4 touches of that resistance. Okay, support, support. Multiple tests of the support right there, and then the break. Okay, so you could chart it as either or, to be perfectly honest with you. But again, even if you're going to take this as what if you called it? If you're going to take it as an ascending broadening wedge, then again, we haven't broken that towards the downside as of yet. However, if we're going to see this DXY continue to push towards the upside, then that's going to get broken towards the downside, and that's probably going to give us an even lower target than what the ascending parallel channel target is. Okay, so we got to be aware of that. It's the market is looking, for me, more bearish than bullish right now. However, if the DXY can turn around at this horizontal level here, okay, we can break back above this resistance level here on Bitcoin, then we can get back into that shorter term bullish sentiments. But right now I'm still bearish because DXY is continuing to push, ES is getting a rejection, and Bitcoin has broken towards the downside and looks as though it could move lower. Even coming onto the daily as well, we're forming higher highs. Okay, we've come into a weekly level up here, we've seen a rejection, okay, and we're forming higher highs on the price action charts. RSI, we're forming lower lows, textbook bearish divergence. So the expectation is that the price is most likely going to pull back. Okay, I've spoke about this a number of times now, but looking at the psychology of a market cycle on the Wall Street cheat sheet, we're looking very, very similar to this anger phase right here, where we come down, we have a massive leg towards the downside, which we saw over the course of 2022. Okay, then we form a low, okay, we form a high, then we form a lower low, then we form a lower high. Okay, that's exactly what we're forming on this weekly chart right here. Okay, over the course of 2022, we've had that movement towards the downside, which we can come back to the cheat sheet and we can very clearly see, we have that movement, we have a push towards the upside, then we have this big move towards the downside. We've had that over the course of 2022. What happened? Okay, end of 2021, we formed the high. Okay, then coming into late 2021, coming into the start of 2022, we have this move towards the downside, right? That's exactly what we had right here. Okay, we form the high, move towards the downside, then we have a little push towards the upside, which we could take this little push towards the upside here as that exact move there, and then we have that big move towards the downside, which, looking at the cheat sheet again, and of course I have just let's just there we go. Let's just bring that up again. I've just got rid of that. Yeah, here we go. We've had that big move towards the downside. As you can see right here, that big move towards the downside, coming back onto the charts, big move towards the downside. And now we're forming this anger phase, okay, where we form a low, we form a high, we form a lower low, and then we form a lower high, which we actually just formed as of yesterday morning, Sunday night, okay, because we formed, we got formed a red candle here, which, is forming a lower high, from this previous high right here. And that is looking very, very similar to this anger phase where we come down, we form a low, we form a high, we form a lower low, we form a lower high. Then it starts leading into the depression phase, okay, where we have another leg down for Bitcoin. It slowly churns its way down, forming another low of the bear market. Then we can sort of get out of that depression phase, coming into this disbelief phase. Okay, so this is where I think we are in the market. I think we're leaving this anger phase. Okay, I think that we are forming this high right here, this lower high, and now we are going to slowly churn our way down, forming a new low new low of the bear market, and that could take us down to 14,000, 12,000, 10,000. Those targets. So let me know in the comments what you think. Do you agree with me here? But personally, for me, this is just looking almost textbook for me. Okay, just to show you again, we form the high, we have a leg down, push up, leg down. Okay, then we form that anger phase that we formed right there. Okay, this is exactly what this Wall Street cheat sheet shows us. Okay, we form a high, we have a leg down, a push up, then the bigger leg down, then we form the anger phase. Let me know in the comments, but this is looking almost textbook. Okay, well, it is looking textbook. Okay, so for me, it is signaling that we could have another leg towards the downside. So it's sort of like slowly churning its way down, not a massive capitulation event, like we had right here, where the price just bombed it down. Okay, what I would expect is like slowly churning its way down, with a lot of uncertainty going on globally, and then once we've had that, then we can start looking at the bull market returning again. But for me right now, I still think there could be another leg towards the downside. I think it's looking high. There's a high chance of that because of what's going on, with the technicals. First of all, we're getting these bearish indications on the technicals, as in, the first one being this right here, okay, looking very similar to that cheat sheet. We've got RSI. If we're bringing up the RSI, we have a hidden bearish divergence. We're forming lower lows on the price action chart here. However, on the RSI, we're forming higher highs. Hidden bearish divergence right there. Okay, the last time we formed a divergence on the weekly chart, okay, it played out very, very well. Okay, lower lows right here, RSI, higher highs. Okay, textbook bullish divergence. What happened? The price pushed towards the upside. Okay, bearish divergence are very respectable. I've gone back in the past and I've actually tested them, and 74% of the time they do play out. And this hidden bearish divergence could be what starts the move towards the downside. You can see we touched this resistance level right here, pretty much to the dollar. We're getting a rejection from it as of right now. DXY is pushing towards the upside. These are really not good signs. These are things that we really don't want to see, because if we see these things, we're most likely going lower. We want to see the DXY pulling back, and we want to see the DXY break $101. If it can break that, then I'll be happy to say that the bull market is starting again, because we're breaking sort of a major level here, and the next sort of major level is sort of 99, but it's not really a very, very strong level. So we could see the DXY have a major move towards the downside if we do break 101. Okay, but we're not doing that. We're bouncing off this level here, and that is bad for the markets. And then the ES as well, it's got this major resistance right above us. We need to get above that as well, to sort of be happy that we're coming into this bull market. But right now we're not getting above that, so we want to see the price getting above that level. So for me right now, I'm still sat more bearish. I'm not going to I'm not going to give in to the FOMO. I'm not going to get bullish just for the sake of it, just because the sake of that everyone is getting bullish. Yes, there is a possibility that we could flip bullish. Okay, and for me to flip bullish, we would need to break above 25,000, use it as support, have a slight bounce, and then I would be happy that the price is going to not 300k yet, 30k. Okay, I would expect the price to go to 30k if we can break above 25k. Use that as support and have a slight bounce off of that. I'd be happy to say Bitcoin's going to 30k, but I would also like to see that DXY pulling back as well, continuing to pull back whilst Bitcoin does that. But whilst we're below 25k, forming these bearish divergence, looking very similar to this Wall Street cheat sheet, for me, I'm still going to sit on the bearish scenario playing out. Maria, I hope that's the case because I would have missed the bottom. Let's have a look. Chuck the man says the bottom is in. Personally, for me, I don't where we are right now. I don't think so. I think this still could be lower. We've got recession looming over our heads. I don't know if you've seen any of our previous videos, but I'll just go over it very quickly. Okay, we've got a recession looming over our head. Reason being, okay, 2-year has exceeded the 10-year yield. Every time this has happened, a recession has followed. Okay, so the 10-year yield is 3.630%, and the 2-year yield is 4.5%. 0.433%. Okay. That means that the 2-year has exceeded the 10-year yield. Normally, the 10-year would exceed the 2-year because you would think if you're putting your money away for longer, you would get a higher yield. Okay, but that's not the case right now. If you put your money away for 2 years, you're getting a higher yield than you are if you put your money away for 10 years, which doesn't seem right. Okay, but every time this has happened before, okay, it's led into a recession. So when this orange line goes below the black line, that is a sign that the 2-year has exceeded the 10-year yield. Okay, and a recession is shown by these grey boxes here. As you can see, every time the 2-year has exceeded the 10-year, as in the orange line goes below the black line into the minuses, okay, a recession has come shortly after. Okay, so if we're going to be going into a recession, this is outdated, by the way, but the orange line would be somewhere down here right now. But if we are going to be going into a recession, then traditional markets are going to have a big pullback, okay, which is going to feed into the crypto market as well. So personally, for me, I don't think that. Looking at the technicals, looking at the fundamentals, I still think we could have another move towards the downside. Plus, the Fed is still increasing the rates. Okay, whilst the Fed is still increasing the rates, we're going to see a continuation towards the downside. Okay, I spoke about this before the FOMC meeting, and during that FOMC meeting, we had the price pumping. After the FOMC meeting, we had the price pumping, and I said this. I expected this, but then I said afterwards. Okay, I said after the FOMC meeting, it could be a day after, could be a few hours after, we're most likely going to see that price pull back. And that's exactly what happened. We had the price pull back because, yes, it's bullish fairly bullish that the Fed are increasing by decreased amounts, as in, not 50 basis points anymore, by 25 basis points. Yes, that's a bullish in the shorter term. Okay, but in the taking a step back and look at the broader picture, it is still bearish because the Fed is still increasing rates. Okay, so we just got to be aware of that. And we've also got the likes of, I mentioned this a few weeks ago, but Goldman Sachs is laying off as many as 3,200 employees. I know Google is laying off over 10,000, I think they were saying. World Bank warns of recession 2023. Even Coinbase laying off 20% of its staff. So they're preparing for something big. Okay, so we've got to take all of this into consideration as well. What have we got later on? So in the next 7 days, on the 14th of Feb, on Valentine's Day, we have core inflation rate year over year, inflation rate year over year as well. So that's going to be very important as well. That is most likely going to move the market and give the market a solid direction as well. For me, I still think there could be another low within the bear market. Your bias is always prices going down, so you can short it. It's worked for me. To be honest with you. I have been, before Christmas, I was shorting a lot, and that was the obvious thing to do because the price was going down. Okay, yes, I've taken longs, but the majority of the time I've been taking shorts because we're in a bear market. The price is going down. It won't go back below 1,550. I'm guessing you mean 15,500. The bottom is in. Okay, you may be right. You may be right, but you may be wrong. We'll have to see. I'll be happy at 16 to 18K. To be honest, if we are going to have another leg towards the downside, okay, if this Wall Street cheat sheet is going to play out, okay, as in we're leaving this anger phase, going into that depression phase, I personally think that the price could go down to, let's see, 14,000. 14,000 here would be that first sort of support level. If it breaks that, then we're looking at 12,000. 11,000, potentially even 10,000. Okay, I'm not saying that it is going to go down to 10,000, but I think if we break 12,000, we could potentially get a wick down to 10,000, possibly. But we'll have to see if it comes to that. Okay, I'm not 100% saying that the price is going to go down and form a new low of the bear market. I'm just saying if we're going to stay below this level here, it's pretty likely because we're forming bearish divergences. Okay, we're looking very similar to that Wall Street cheat sheets, and the fundamentals are looking very bearish as well. Okay, so we've got to be very, very aware of that. What positions are you in? Okay, I am currently in a short position. I didn't bring it to you live. as I said in one of the previous streams, I want to start churning out these trades for you like I was before Christmas, coming live, showing you me opening these trades and, showing you the profit and all of that. I want to start doing that. But I did take a little break from trading because, we had Christmas, we had New Year, and also I went on holiday as well. So I did take a break from trading. And now I'm just sort of trying to get back into the swing of things. But whilst I'm doing that, I'm going to do that off camera. Then once I'm back into the swing of things, I'm smashing out trades once again. Of course, I'm going to bring them to you before Christmas. In the 2.5 months before Christmas, we made 10 trades. Okay, really, really nice trades. 2 of them were losing trades, 8 of them were winning trades. Okay, the 2 losing trades, both of them were a 10% loss. Okay, but some of the winning trades were 120%. Okay, so we made some really, really nice trades there. And I'm looking to, do that throughout this year as well. But right now, I took a short from here, right here. Reason being, okay, we were hitting a previous high here. Okay, we formed a swing failure pattern right here, and we saw a reaction towards the downside. Okay, we also had that as a horizontal level as well. What else? We had the resistance from the ascending parallel channel. Okay, that was tested right there. And what else were we seeing as well? We were seeing a bearish divergence, higher highs on the price action chart, as you can see right here, and then lower lows on the RSI. So that's why I took a short position, and the average entry for that was actually around $24,000. And right where it is right now, I have 5% leverage, so 20% in a profit as of right now on that trade. But as I said, once I see another trading opportunity, I am going to start bringing these trades live to you. As in, I'm going to come live and show you me opening these trades, putting in those orders, putting in those limit orders, and all of that. There are different types of recessions. Not all recessions can create equal. Yeah, there are different types of recessions. I do agree with you there. And they are saying that this one isn't going to be as bad as others, but they say that just to lighten it, don't they? So we've got to be aware of that. Bitcoin small push up doesn't make new highs, but gives altcoins dominance a chance to reset. What do you think? Let's have a quick look at the dominance, and let's have a quick look. I do have to be aware of the time as well. Okay, I've got 7 minutes left. I've got my food in the oven, so I don't want to burn it. Dominance. Let's see the dominance right here. Okay, so I have been looking at the dominance previously on the weekly here. Okay, so the dominance is rising. After finding support at this major level here. To be honest with you, if we are going to get what I expect, as in we are going to have another leg towards the downside following this Wall Street cheat sheet, okay, leading into that depression phase, having a new low of the bear market, what I would actually expect is, let's just get that full screen. There we go. So what I would actually expect is that the dominance comes all the way up to potentially 47, 48%, and sort of form a high there. And then from there, once we get back into this bull market, as in, we've established the bottom, which could be 14,000, maybe even lower, then, I think the dominance would be somewhere up here. And then when we start churning towards the upside, we start pushing towards the upside, then I think we see a rejection from here. Okay, the dominance starts to decrease. And then that's when the altcoins have their major rallies. And then potentially in the future, maybe this year, maybe next year, we could break this support right here, meaning that the altcoins have an even bigger push towards the upside, just creating that mega altcoin season. But for me right now, where I'm sitting right now is that Bitcoin could form another low, or is more likely to form another low within the bear market. And if that is the case, then I would expect the dominance to push to 47%, 48%. So that's what I would be looking at. Short term, we are bullish. Give it a week or two, and expect a retracement. Okay, if that's what you think, then stick with that. It's always good to stick with what you believe. You have to believe what your theory is. And that's what I'm doing. I'm not going to change my theory because, to be honest with you, there's no reason for me to change my theory. I'm still more bearish than bullish right now. As I said, I've talked you through the bullish scenario. If we can break above 25,000, hold that as support, okay, then we can start talking about 30K. Yes, but because we're below that, we're forming bearish divergences. Okay, we're looking at the daily RSI still in that sort of overextended territory, forming bearish divergences there, looking very similar to this Wall Street cheat sheet right here. It's looking identical. We're literally looking identical to this Wall Street cheat sheet. High, leg down, push up, leg down, anger phase. Okay, coming back to the Wall Street cheat sheet. Okay, high, leg down, push towards the upside, leg down, anger phase right here. Then the depression phase, and that's sort of all the price needs to form now is that depression phase, and then we can start going into that bull. Or we can start going into that bull market. Okay, all you bears will be wrecked very soon. Okay, potentially. As of right now, I'm not, and I probably won't be because I always use a stop loss. As Ben always likes to say, use protection. I doubt I could ever be wrecked within this market because I always make sure my stop loss is at 10%. But then again, I could be right. I could be right. It's for me. It's looking prime for a pullback right now, and it's looking prime that we are going to have another leg towards the downside. As I said, could be wrong, and we could break above 25,000, use it as support. Then we're talking about 30K. Yeah, Chuck the man. Only time will tell. Time will tell, of course. The farthest it will go is 16,600. $16,600. Where would that be? Here, yeah. Look, even just looking at the weekly, you can see there's lots of support down there. Coming on the daily as well. $16,600 around this area here. There's going to be a strong POC at that level, definitely. But yeah, then again, if we're breaking back below $18,800, I'd be looking for 14,000. I would be looking for 14,000 if that's the case. But yeah, we'll have to see. As you said, we'll end it on this. Time will tell. Time will tell. So yeah, I think that's everything I've got for you today. I hope you've enjoyed. If you have, please smash a like on this video. And yeah, I will hopefully see you in the next live stream. And if there is anything else to update you with, then of course I will come live and update you with that. As I said, I'm going to try and start churning out these trades for you. No matter what the time is, I'm going to be live showing you me trading the market. But yeah, smash a like on this video, and I will see you in the next video, guys. Thank you very much for watching. Goodbye.